This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome back, everybody, to Avoiding the Crowd podcast. I'm your producer, Robert Kraft, on behalf of SNN.Network. And joining us, it's your host, Maj Soueidan. Maj, what's going on, man?
How you doing, Bobby? I'm doing great.
Still you're out of the bunker this time.
Yeah, that's right. Now, where I'm at now is a little chillier though, so I have to bundle up.
You got the coat on going on. Nice.
I'm having a hard time finding good internet where I'm at. Last week. Yeah.
Really? What's going on? I'm Florida's having issues with internet connection. What's happening?
I'm actually not in Florida right now. I'm actually in Philadelphia visiting my brother.
Oh, nice. So, nice. How's everyone doing?
They're doing great, and the weather is cooperating, so I'm happy.
Oh, there you go. Look, I mean, where you're at. Look, you have a whiteboard. You're able to write something on there. Why would you write tier 1 quality microcaps? Are you alluding to today's topic or something?
I just thought about it last second. Like I had nothing to talk about because you always put me under freaking like a spot. That
I sent you a great topic yesterday that we're gonna save for a future pod, by the way. But I sent you a great topic.
We can do that now too. I mean, we can do both.
Oh, for sure. Well, let's do this one because I thought it was a really good idea. As most of you know, Maj publishes GeoInvesting.com, has a newsletter that he puts out there that's really all about covering tier 1 quality microcaps. Highly recommend everybody go and subscribe. I mean, part of the reason we started this podcast is Maj is one of the best stock pickers out there in microcaps. And so, being that he happens to not only pick tier 1 or tries to pick and hopefully always does pick tier 1 quality microcaps, he has a newsletter talking about them. So we thought it would be a good idea to really kind of define what that means. What are tier 1 quality microcaps? So with that, Maj, you want to explain this?
Yeah. And thanks for the compliments there, Bobby. But there's, I think, maybe a little overdone there, but whatever. I'll take it. Thank you. Yeah. So the whole tier 1 quality thing came up. I've been like invested for 3 decades now and learning a lot along the way and making a lot of mistakes. And I've invested in a lot of junk over time. And, I recently decided to take a step back and look at my own investing career and, GeoInvesting and how it's evolved. And, the last several, like maybe 3 years, we really tried to tighten up GeoInvesting's kind of search for quality. When we launched Geo, we were still focused on quality, but we also, maybe a little more speculative. So we would kind of bring some speculative ideas to our membership base. But over time, we figured, hey, we hit it out of the park, a few times with speculative picks, but what I would call like lower quality or not tier 1 quality companies. But when I looked at the long-term performance of a lot of our stocks, obviously the ones that shined year in year out after year, they tend to be like tier 1 quality. And I really didn't define it until, maybe a year ago. I started thinking about it, like, what does that mean? What does a tier 1 mean? What are some of the common characteristics? And the reason I started thinking about that was because I've noticed there's just a lot of lower quality companies going public, in my opinion, these days. And I can finally say from investing for a long time, back in the day, it used to be this and that. So it's not like my dad or something, or all out of touch, blowhard. But it's true. I mean, so what I kind of came to the conclusion was there's some qualities that are consistent across some of the companies that I've had success with over the years. And I decided maybe to define those. And we've really, really been concentrating on bringing more of those ideas to GeoInvesting. And it's really more fun for me too. And we're really loving it. and it's actually reduced my investment universe, from, a lot. We had a lot more. We might have had at one point at Geo a couple hundred stocks we were kind of like following. I mean, in our long portfolio when we first started, and we've really narrowed that down to a lot more manageable kind of universe for us. Although we cover, hundreds and hundreds of stocks in GeoInvesting, because we just had 13 years of doing this. That's also allowed us to create a really nice portfolio or universe of high quality, what we feel, companies. And these are coming in out of the favor too, which is nice. I mean, you might have a company, it's a high quality company that maybe wasn't investable 3-4 years ago because we just didn't think it was the right time. Now that's coming to cycle, but other ones are tier one companies are dropping off maybe our portfolio because maybe the growth isn't there anymore, even though they're high quality, or maybe their price targets have been reached. So we're continually monitoring that universe, and it's become more manageable for us, which our members are really appreciating that, I think, too. So we can talk about the returns later another time, Bobby, of those stocks, but to give some case studies and stuff. But so I wanted to share a tier one, list. And there's right now it's about 10, and that may change over time. It used to be 9. I added one to it recently. And I'm going to share my screen, and we can go over them real briefly on these characteristics and maybe see how that goes. This is actually one of my favorite. There's 10 of them here, but this first number one here, long operating history of at least 20 years. The longer, the better, really. And that really wasn't on this list until recently. I can't believe I didn't put it on the list. And then that basically stems from my thought earlier, or my experience, that there's a lot of these newer companies, and just across MicroCaps, really, that I just think are lower quality. We've experimented with Reg A Plus, which I think has been a disaster, and that nothing, not great quality come out of that. And even some of the reverse mergers that I've seen aren't the best quality. So I think a lot of it is because of the way things have changed over time in terms of the perspective of investors and management teams, thinking shorter term versus longer term. And a lot of these older school management teams still have that kind of mentality to think long term. There's a purity to some of the way they're thinking. So I try and find many of those really kind of legacy management teams. Sometimes it's the same management team that's actually still with the company, and sometimes a newer team coming in maybe to kind of give the old team a little more a reality check, maybe, and maybe find some interesting things that are going on in the company that aren't being utilized correctly. So that you'll see a lot of our companies now. I would say maybe 80% of our companies are kind of falling into that kind of category now. And so that's really, really important thing to me. And what's important too is a lot of these older companies, if they've been around for 50, 60 years, they've hung around, or they've proven they can hang around, even if they're not growing yet, or they went through growth spurts and then they've had a long time of doing nothing but just sticking around, generating cash flow, not growing. And these companies, things tend to happen where, when there is time to start growing again, they're ready for it. For example, COVID-19 has basically created reinvented a lot of these older school companies to be able to grow again. So, obviously, strong management. That's a no-brainer. I'm looking for stronger teams that have a history maybe of doing it right at other companies, or have even been at their company for a long time and had periods of strong growth. And I had this think, like, I'd love to find these companies with best-in-class products, with first-in-class management teams, or first-class management teams. And we try as much as possible to find those type of situations. And particularly, I like some of these CEOs and CFOs that have kind of gone through difficult times and have proven they can rise to a challenge and come out even better. And I really enjoy meeting these CEOs that have tell me about their problems and admit they went wrong, but came out of it stronger. So a lot of times these happen. It's funny, these situations are around the marketing of a particular product line or service, where the company just he didn't have the right, or she, maybe the right marketing plan in place, or hire the wrong marketing team, and learn from that. And that gives me confidence, like, and that's not a mistake they're going to make again. Let them go through some mistakes before I invest in them. Sometimes how I feel, get that out of the way. So I'm looking for a little history in management too, of solving problems. Number three, a management focus on the business and not the stock price movement. Look, I knew we all want the stock price to go up, and we want our management team to want the stock price to go up. But when we concentrate too much on stock price movement, we can lose focus on the long term. That's not just management teams. That's just us as investors. If we as investors are thinking day to day, minute to minute, we forget to really focus on how to really invest for the long term and analyze the business from that perspective. And sometimes there's hurt and pain you got to take in the short term to build a long-term portfolio and to build a long-term company. So I'm really looking at that as a really important factor for when I look at teams. And they become less prone to being a pump and dump, which can happen a lot in the MicroCap space and MicroCap space. 4, of course, generating revenue. And I don't even mean like tons of revenue, just as long as you show me you're making some revenue and have a path to increase that revenue over time, is really important to us. We don't really invest in development stage companies that much here at Geo. At or near profitability is number 5. Again, this depends on the industry we're dealing with. Some industries we want to have, definitely strong profitability. In other industries, we're not maybe looking for companies that are near profitability. For example, software type of companies or recurring revenue type of companies, we're willing to buy these companies even if they're at break even, as long as they have a long-term, strategy to grow revenues rapidly and eventually be able to, on the dime, create profitability. And you'll see that with a lot of SaaS companies and medical, in the software, a lot of medical device companies that trade more on price of sales or enterprise revenue, enterprise value to sales, as more of a barometer there. So that's something I learned over time. Really, I was very focused on only buying stocks that were highly profitable like right now, and I'm looking only at PEs. But over time, I learned to really look more at the business plan itself and ask myself, okay, well, maybe they're not profitable now. Is there a pathway to profitability 5 years from now? And then analyzing how much money they'll have to grow to get there. Can they get there organically by not raising a lot of money, or they'll have to issue a lot of stock to do that? So these are all factors that play into that. And 6, we love high probability turnaround stories. And I like this because you'll find that it might not look like a tier 1 company, but if you have, so it might be trading at a discount to where maybe it could be if it was a tier 1 company or was was growing at revenue and achieving or nearing profitability. So I'd like to find these really potential tier 1 management teams, product line stories that just aren't quite there yet, are in the middle of a turnaround story. And I've learned that's probably one of my favorites to be involved in now. It really, because it's just, you have especially if, you're maybe in that 5th or 6th inning of the turnaround story where you can tell it's just working. Turnaround stories can be anywhere from revamping a product line to selling off assets and finding a hidden gem that old management team maybe didn't know they had. It's paying down debt, right sizing the balance sheet, these kind of things. The list can go on and on. I think, for some degree, companies are continually in a turnaround story, right? They're always, because you have to keep getting better and keep watching the competition. So there's a lot of variety of turnarounds we can look at. Maybe later, at a different time we could do that, Bobby. It'd be a lot of fun, actually. And again, that wasn't something I was willing to do well into my career. Probably I didn't do much turnaround stories for my first 15, 20 years. I wasn't comfortable with it. But over time, I became very comfortable with it. And a lot of that's because, especially in the nano-cap, which we're already ignored, these stocks are already ignored. And now when you have a what looks like a shitty company ignored that could be, very beautiful, it stays hidden for even longer and allows us to buy a lot more stock at depressed levels. Number 7, of course, high insider ownership. And then that really doesn't deserve much explanation. I think, we like to see teams that have a lot of ownership by management. Number 8, manageable debt burden. We don't mind companies that have debt, and we actually like a little bit of debt if the return on an investment is favorable. But we don't like companies with a lot of like bloated debt structures. We will do it once in a while if the company is very unique in terms of its growth story. But preferably, we like to see companies, if they have a lot of debt, and we do want to buy them, to have a pathway to maybe paying down that debt somewhat to some degree. I think usually we're looking for a debt equity maybe we're okay 20, under 20 or 30%. Is kind of what we'd be looking at. Ability to grow without excessive equity raises is number 9. I think that, Bobby. We talk about it all the time. We love investing in companies that can grow internally, use their capital, use their equity raises sparingly, maybe for interesting tuck acquisitions. But that's really important part of what we do here. Not saying that some companies get away with it and they issue stock and they grow, but over time it's just usually our probability for success is better looking at companies that treat their shares like a treasure or gold. And again, that goes hand in hand with number 10. Shares outstanding are not excessive. I've always talked about this, at least in U.S. companies. We're looking for investing in these smaller companies with less than 50 million outstanding shares. And I'm usually well under 10 or 20 million and the ones I look at. And the reason that is really it's not necessarily the high share count, that it's what it means. And it could show that a management team has just been unsuccessful using its stock accretively. So you're basically looking at the soul of the management team sometimes. So if they're willing to continue issuing shares and maybe not get much out of the business, it shows that I'm not investing in the right management team. It's a kind of report card thing. Now, what I will do, if there's a new team that comes in, for example, I'm not going to necessarily hold them accountable for some of the sins of old management. So there are times when I will put that requirement aside and consider going breaking that rule a little bit. Now, it's also, Bobby, important to know that not every stock that we buy is going to meet all 10 of these things, but we're looking for it to go in that direction, right? And there might be some that are more important than others. There may be a company only meets 3 or 4, but for that company, it could be life-changing depending on which ones it is. There's some other stuff here I could probably add, and I probably should add, maybe margins, these kind of things, gross margins, operating margins, possibly I'm thinking about that. Or maybe things like what I could add here is, we love companies that have a lot of operating leverage, that are able to grow earnings per share and net income with smaller increases in revenue. We love those. So,
hey, Maj, is this list in any particular order of importance, or is it?
It depends, man. It's not really. I can tell you that when I find a company with a long operating history that's been ignored and hasn't really just been sticking around, even though the story isn't that great, I love those companies. I love these long operating history companies. I'm just looking for them to some point break out of it to an inflection point. But they're all pretty important to me. Like, the high insider ownership, for example, which I think is important. It might not be the most. It's not probably. I'll buy stocks with, low insider ownership possibly. Like, I'm looking for at least 20%, for example. That's what I want to see, 23%. But I've owned companies, with 5-10%. That are still okay. Have worked out. And again, it depends on the industry that I'm looking at. Again, if I'm looking at a software company or medical device company, I'm more concerned about generating revenue than I am near-term profitability, possibly. So it's really a scenario analysis, Bobby, depending on what I'm looking at.
Well, is there any one of these criteria that have maybe led you down the wrong path? Where you're like, oh, it's at or near profitability. Let's take a deeper dive and then gone from there. I mean, has any of these, it's on the list, but it's sometimes steered you in that wrong direction?
Well, of course, you always have to look. These are only lists, right? But you have to continue to dig into the quality of the story. And yeah, we make mistakes all the time, thinking that we found something that meets a criteria and it doesn't in the end. And that's, although I love these turnaround stories a lot, like I said earlier, that's where I've often maybe hit a snag where I invested in a turnaround that didn't quite play out the way I thought it would play out. And I think that's where some of my bigger mistakes have been made, but that's expected to some degree. I know this: when I break the 9 and 10 ability to grow without excessive equity raises or shares outstanding or not excessive, when I break those, you usually go back and regret it. It's oftentimes. Now, I'm not talking Canada, I'm talking in the US. And we can talk about why that is later. I think I have some kind of stupid theories on that. So.
Let's hear a stupid theory. Come on, we got some.
Not now. We'll talk about it later. I'm still flushing it out and getting the
data. Fair enough. All right. Well, I mean, is there any final thoughts that you want your audience to know about long tier one quality microcaps? You have an example of? How about that? Here, let's do this. Do you have an example of an investment that you had that hit the most of your core criteria?
Ooh,
and did it work out? I guess that's the real question.
Well, I'm obviously gonna. Well, I can. I think that should be another podcast because I can give you one that worked out and one that didn't work out.
Fair enough.
We could do that because I got to think about all the. But there are, there's a definitely.
Well, no, we'll save that. We'll save that for the In the Market Trenches podcast. We got to get you on as a guest on there to talk about that. I think that would be a good.
Great. I can do maybe like a Well, I know we talked about IEC, for example, on this podcast.
Yep.
You can, if you want to, maybe when you post this podcast, you can put a link to that one.
Yep.
And that's a pure example of one that meets a lot of these criteria. Maybe most of them actually. So, although they don't meet number 7, insider ownership, I don't think it's high there. I got to go back and look at that. And the debt burden, I got to take a look at that again because they have a low cash balance, but which isn't debt, but relative with the cash position they have relative to their debt might throw some people off, but in their case, they've been able to manage it really well. So, and that's how they've operated for years. So that's a great example of one where it might not meet. And of course, I could put some balance sheet stuff on here too, where maybe number 8 might be better to say balance sheet is kind of meeting certain criteria, list a few bullet points there. But IEC doesn't operate with a lot of cash in the balance sheet. And they have, probably a little more debt than I would want. But they've been able to prove they can grow through that.
Gotcha. All right. Well, should we unshare and get some final thoughts and take us home?
Yeah. Here we go.
All right. Here we go. All right, man. All right. So you want to wrap it up real quick on tier 1 quality microcaps, and then we'll get to BSing about football.
Yeah. I think that's good. I think, look, if anybody out there has their version of maybe some of a tier 1 company, or maybe that some criteria that we think we should include, let me know, please. I'd love to add them to this list, maybe together. I'm sure we can continue to flush this out and have a lot of subcategories too. But I like to keep it simple as I can, though. Then we can just get too granular, and that's not good either.
Very good. All right. So now
I just encourage you to, anybody's interested in learning more about these companies, come to GeoInvesting.com. We're at it every day. Really looking for these companies and we're a lot of fresh ideas, but we also have 13 years of archive research in a lot of these companies. So if you want to do your own research and kind of juice that up a little bit, you can use our archives for that too. So you can GeoInvesting.com. We have a free trial. You can follow me on Twitter at Maj GeoInvesting. You can follow GeoInvesting at GeoInvesting, and email me at maj@geoinvesting.com if you want to talk stocks at all or more about the subject.
Very good. All right. All right. So, well, any thoughts on this past weekend and then upcoming schedule? You guys got Tennessee next week. So
yeah,
chalk that up to a loss.
About the Cleveland game, remember?
Oh yeah, I didn't take Cleveland. I was not going to take Cleveland on that game. That was an easy.
You owe me $5,000, Bobby.
Oh, yeah, right, yeah, 5,000. Though it's being wired today, dude. I promise.
When I put you on mute, we made that bet. But yeah, the Pittsburgh came in that game. I remember they played a really bad game against the Eagles, so they got lucky with that one last week.
Yeah,
I thought Cleveland stole one. Well, you kind of did they play the Colts? I think they played the Colts last week.
They did, yeah. The week before, yeah.
So I just thought the Steelers were just and the Steelers had played their schedule wasn't that tough, and they had a lot to prove going to play Cleveland. So I think that's why that one, I was really hot about that. They crushed Cleveland. This week, I don't know, man. I mean, Tennessee, they stole one, right? I don't know who stole that.
I don't know, man. They stole that one too. I mean, I don't know. They look pretty good too.
It's gonna be tough. I'm not feeling that confident about the Steelers. I mean, I don't think the spread's out yet. And the Steelers now are 5-0 now? Yeah.
Yeah, they're 5-0.
That's the first time since 74 when they were 4-0. So yeah, I mean, and their defense really played up the par. This was their best game they played defensively. So I'm still long the Steelers. The Titans, you got an ex-Belichick coach there, and the Steelers' record of beating Belichick in New England was not that good. So I'm not ready to pick it yet, but I'm leaning towards, unfortunately, this could be the game where the Steelers kind of maybe
this is a test game. This is a big game,
but I still think they're going to pull it off, but I don't know if they'll cover. So we got to see what that spread is. Maybe it may be 3 points. What do you think? That's probably going to be a 3.5 point spread.
Maybe
we'll see.
Yeah. We got my Giants.
I would take them. I would take it them. If there's anything more than 7 or 8, I mean, I would probably take them to win, but not to cover.
Gotcha. We got my Giants playing your hometown team though right now.
Are they playing other? Oh,
yeah, they're playing Philly. They're playing Philly this week. That should be. Hey, we're on a 1-game winning streak, dude. All right, look, we'll take a win any way we can. I mean, unfortunately, I'm in LA and I don't have Red Zone, so of course I can watch the game. But I saw the highlights.
I think you'll win that game.
What?
I think you're gonna win.
You think we're gonna win? I hope we win. That'd be nice. Honestly, I don't mind if we just tank for Trevor. I'm cool. Win, lose, just nobody else get injured. We don't need any more ACLs. That's no good. That doesn't help anybody. So just make it fun. I mean, I do always like being the Eagles. It would be nice to see
Well, they lost. They lost 2 really tough games in a row, right? The Eagles. They lost to the Redskins.
I mean, they had 2. Those are 2 tough games, though, man. Like they lost Steelers. They lost to your Steelers, and then they lost to Baltimore. They lost to Baltimore by 2 points this last week. I mean, they almost stole that one.
They did, yeah, but again, they were down big against the Ravens. They're down big against Steelers. Both 17 points, both games. Come back that close to win it, and they can't. I think they're going to be it's going to be tough to come back emotionally from that. I think, and I think the Redskins beat them. I think didn't they the first game of the season or not? Oh,
wait, the Red. Yeah. It's Washington football
after being up 17 points. So
yeah. So they lost that one. They lost the Rams. They tied the Bengals, and then they beat the Niners. But that was
Bengals. But you guys got a good chance here, by the way.
I don't know. I don't know. They play tough. They play tough against good teams. And like I said, we're tanking for Trevor. I don't even care. It's a Thursday, and it's a Thursday night game. anything could happen on these Thursday night games. That's
Yeah.
definite. I'm just stoked. I'll actually get it. I'm just happy they didn't put it on the NFL Network. I would think this is the type of game they might NFL Network it with the 1-5 versus a 1-4-1 team. But I guess we got big enough markets where we actually made it to the big time. We're on Fox, so
Right.
hey, I'll take it. But all right. Well, I think that's our football talk for the week. I really hope that nobody makes any bets based on anything that we said, and please do not, because as much as we like to think we know shit, we don't know shit. We just like football. But I like to. Here, well, let's land the plane. Here we go. I'm producer Robert Kraft. You can follow me on Twitter at Bobby K Kraft, BOBBYKKRAFT. You can listen to Avoiding the Crowd wherever you listen to podcasts. And also the website is avoidingthecrowd.podbean.com. And you can actually watch this on our YouTube channel, youtube.com/SNNWire. And Maj, you want to repeat where people can find more information about you?
Yeah, it's GeoInvesting.com. Just go there and send us an email. Maj GeoInvesting, and I'll get you a free trial if you're interested.
Very good. All right, dude. I'll let you go. We got games on right now. Let's go. Let's watch. I got Bills and Chiefs on this whole time. Let's do this.
All right, Bobby.
All right, man. Take care. Have a good one. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.